Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. This is Steve Rhodes, host of the Trader's Edge, and it is Wonderful Wednesday. Thanks so much for joining us. I absolutely love being here with you, and it's going to be a great hour. And then, of course, following this hour, you got Tom and I doing the Money Masters show. Then we got our man Basil Chapman. I'm not sure who's filling in for Larry on the 12 to 1 show. We'll find out during this show. We got David White, the warm-up band for the Tom O'Brien show from 4 to 6. And, you know, folks, thanks so much for listening on the radio. We really do appreciate that. It's going to be Kate Stalter is going to be filling in for Larry from 12 to 1 today. So an absolutely great lineup out there. And, you want to watch this show on TigerTV. Why? Because I promise you, I'm going to teach you something today. That's really what it's all about. That's all about growth. It's all about, for me, I live in the area. My two areas of that I focus on are growth and contribution. I absolutely love living in that zone, if you will. And I'm in the zone. You're going to be in the zone here. You know, we're talking as far as the markets. You know, yesterday you had the Dow down 213, S&P's down 23. This morning you got the futures up, the Dow up 82. You know, plus fair value. It's probably about 100 or so. You've got the ES Mini up 10 points, trading out at 1367.25 right now. The Nasdaq up 18. We're going to talk about what that means. Talk about the patterns that are out there. I am going to, I really love artists, if you will. Love artists. In fact, it really all started for me. It started by growing up in Detroit. I'm originally from Detroit. Was born in Detroit, and it just simply had such an appreciation for music. I tried playing music, but I learned at an early stage that was not my gig. I was good at hearing music, absolutely loved music, fell in love with watching the guitar styling of Earl Klugh at a young age as I would hang out at Baker's Keyboard Lounge. I was fortunate in life. When I was younger, I looked older, and I like to think as I'm older, I look a little bit younger. And so that was great. Was always able to get into bars when I shouldn't have been. But what was great was I had such an appreciation for artists. And I was in my senior year of high school. My father was transferred to Milwaukee, Wisconsin. I thought Detroit was cold. Detroit is warm compared to Milwaukee, Wisconsin in the wintertime, and it was in the middle of my senior year of high school, so that was a real bummer. But I learned so much from that. One of the things that I learned was my dad had to transfer. He had turned down too many transfers, and this was one of those things where it would have been a career-ending decision had he not taken it. And so I learned at an early stage I wanted to be an entrepreneur. I didn't want anybody controlling me. I hope that's also why you're tuned in here, because I want you to be able to control what's in front of you, this palette, and you see what I realized was this is artwork. What I'm going to show you today, I'm going to show you this is my palette. I want this to be your palette. I want to be able to teach you some of the painting tools that we use, some of the brush strokes that we use to understand what the markets are doing, because there is absolute, these markets respond in ways. I want you to pay attention to Fibonacci expansion and contraction numbers, 0.786, 0.618, 0.382, and the expansion numbers, 1.272, 1.618. They are going on around us all the time, and I want to help you overcome some of your enemies of fear, indifference, indecision, doubt, worry, being over caution, because there's a huge cost to not taking action. Yesterday I talked about indifference just a bit. To me, indifference is not accepting or not recognizing when a market is going up on light volume, and you want to be able to recognize that. We showed that right off the bat yesterday because we went to some stocks that absolutely were dropping after the market opened, and we saw that they went right back down to an area where there was volume. So you don't want to be indifferent to a market that's rising. You want to understand it. You want to understand where you're at. You want to make sure that you're using stops. Indecision, folks, that is not taking a trade, let's say, when your pattern sets up for you, so you want to get rid of that indecision. Maybe it's some other type of indecision in life. Get rid of that piece of the fear. How about doubt? Doubt is just simply not, in my opinion, when it comes to charting, it's not believing in sacred geometry. You absolutely want to understand those Fibonacci numbers, those sacred geometry numbers. You don't want to doubt it, in my opinion. And then worry. How about worry? You know what worry is all about when it comes to trading? Worry is about trading without stops, or worry is about over-allocation of your funds. It's not respecting and using that 1% principle. I teach that. In fact, if you go to the homepage of TFNN.com, you will see a position size calculator out there. There is I think it's a 30-minute a 30-minute video that goes with it. It explains a bit about it. In fact, if you do a little bit more diving down on YouTube, maybe on Channel 5 on TigerTV, you'll see another webcast out there that will help you to understand position sizing, that 1% risk. You can always send me an email, steve@tfnn.com. Love hearing from folks. And then there's that fifth worry, or that first enemy. That's being overcaution. You know, and when it comes to these markets, overcaution is simply just using too tight of a stop. So anyways, we're going to paint the palette here, if you will. And first thing we've got up on the screen here is we've got the 120-minute ES mini chart. Now, you know, no question we had the market move down, slam down, move down hard, had some conviction behind it compared to the prior session. You know, and what we're taking a look at here is where did it pull back to? Well, on the 120-minute, I just simply have the 120-minute chart. It's a little bit easier for you to be able to see it here on Tiger TV. See that beautiful blue Gartley pattern that is out there. What you did have is you did have a 1 to 2, A to B equals CD on this pattern here. That 1A point starting here at 5:30 up at the 14.1975 level. Your B point was down here at the 2:30 time frame on March the 29th. Market moves up into the highs that were created out there on April the 2nd, and that was our C point. And what you've done is a 1 to 2, A to B equals CD pattern that's out there. You also were doing that and coming right together right here in this 0.786 retracement. So knowing that those were the, and when you do a 1 to 1.618, you have a real high probability of a change in market trend. And when you do a 1 to 2, those probability odds go up even higher. The odds are simply in your favor that you're going to see a change in position. If you were trading the ES Mini here, and I wasn't paying attention to this because I was doing the show with Tom last night, and then afterwards didn't really take a look at this until the morning time. But if you were taking a look at this, folks, what you saw here as the market was moving down into the 2:30 time frame, that's when it was making its lows. It got down to a low of 13.5250. That's on the ES Mini. What you will see is coming into the 4:15 time frame. 4:15, what you had was a bullish engulf. And of course, you know, I like this candle right out here too. You know, I'm a big proponent of understanding hammers, bullish, and bearish engulfings. If you just understood just simply those three candle formations, folks, they would help to set you free. You wouldn't have any doubt. You wouldn't worry. You wouldn't be overcautious. You would know how to interpret the charts here. Of course, that hammer out there, I called that the sledgehammer, because that was the hammer of all candles. But what you did get was you got a confirmation as you were completing that 1 to 2, A to B equals CD pattern. I could say I need to change this here on my screen because I'm on Tom's clock, not on my clock. So now I don't know exactly where I'm at in my hour. There we go. Now I got 3 minutes left. And so what we're taking a look at here is we're taking a look at when you complete a pattern, you're looking for a bullish confirmation. This case here would have been a hammer, could have been a bullish engulfing. That's what you got, was a bullish engulfing. And what we've got going on right now is a bounce. Could you have foreseen a bounce coming is a question I have for you. Well, absolutely, you could. Let me show you one of the tools that is in my arsenal. It's one of the tools that I'll be sharing with the folks at the Master Trader course starting Friday and Saturday here in Tampa. You can always join us. You can check out the homepage at tfnn.com. You can see what that is all about. Let me see if I can pull this up here on my screen. Where is it? Where is that thing? Come on, baby. That's not it. Okay, here we go. There we go. Okay, now let me just change this here, this view, to the slide format for us. So give me, where is that? View this thing here in the slideshow. There we go. So now we got the slideshow. Folks, what I have up here right now that you want to be aware of, this is the S&P 500 participation index. We were looking at the ES Mini out there, and when you're taking a look at this, this is what this is showing. This is the last year, and what you're looking at on the bottom here, these are the participation from a percentage standpoint, stocks on the way up or stocks on the way down each day. What you're taking a look at here, this blue or purple line that I've got going along the bottom here, where you're at below a reading of 80, folks, this is what I would call extremes. If you take a look at this on the yearly chart, you can see these extremes out here. These red lines that I've got, these arrows that I have, are showing you at those extremes what was going on in the market. So I've gone back, taken the sample size for a year, couldn't go back further, but this is what really just fits on the screen. This is all that you need to know. If you take a look at going all the way, let's start with the most recent one. That is yesterday. So we take a look at yesterday. You got an extreme reading. You move down. Now, if you take a look and you go back to the one that was in November, this is the November 25th area here. Take a look at this extreme, basically at the same reading that we had yesterday. Of course, that put in a significant market low. Now, when we come back from break, I don't think that we've done that just yet. And I'm going to share that with you as we take a look at some of the other painting tools on my palette. But it is a possible outcome. Take a look at what happened here as we were coming into the August lows. You had that exact same reading. You had a couple of readings down here. And then what happened? You had another one that wasn't so meaningful back here in the June 2010 time frame. If you come back here into the March, though, 2010 time frame, take a look at where that was down in that 80 mark. Take a look at how that made a significant low. There are tools out there, folks. You just need to be aware of them. You've tuned into the right place because I will lead you in the right direction, folks. 877-927-6648. We'll be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about TigerTV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your TigerTV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the TigerTV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
TigerTV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Got the futures up. Dow futures up 91 right now. S&P's up at 11. Up at 1368, up 11 points. The Nasdaq futures up 17 3/4 points, up at 2714.75. Now, before we went to break, we were taking a look at the S&P participation index. I just simply had given you the 12-month view of it, and that 12-month view was showing all of the times where we were really in an extreme. Well, let me get back here. In an extreme mode here. Here is that 12-month. This just simply is they blown up. This is a 6-month view of it. And really what I'm coming and showing you here is when we've gotten below this 80 reading here. We did it yesterday. We did it as we came back into November, the November 25th lows there. You can see how understanding what's going on inside the participation index, and especially if you go back and you take a look at this here, take a look at each time that you've had an extreme reading, you have made a low. Now, these last two here, going back to either the time frame of August or October, I should say. October, I must have said August. August, you just simply had a sideways move. But certainly in October, you put in a significant low. In November 25th, you put in a significant low. And that is just the blown up version of it. So now let's go take a look at what is different about back then versus where we are at right now. So let's go ahead and wipe this screen. Let's put up a new palette, and let's go put up the S&P 500, that same index that we were taking a look at. So let's take a look at what I'm showing here, folks. I'm showing the beautiful palette work, if you will, that Bud Rolfs, has taught us. These are the channel lines. These are the uptrend channel lines and the subcorrection channel lines that I've drawn here on the S&P 500. So if you simply come back into this time frame right here where you've got my cursor, folks, you've got the November 25th time frame. Now remember, we were at an extreme level at November 25th when we took a look at that participation index, but we were also at the bottom of that trend line. When you went back, we were taking a look at October 4th. Remember, October 4th put in a significant low. You were below the 80% mark on the participation index, and you were also at the bottom of that trend line. How about, and look, you were also inside this sub-channel correction that we had going on. In both cases, you are also inside one right now. And you take a look at the S&P 500. What did it do yesterday? Came down to a price point. How does it work? 1358.59. 1358.59 was also the exact low of that May 2nd swing point. Very important May 2nd swing point. You want to understand, in addition to understanding Fibonacci, expansion and contraction, you certainly want to understand channels, uptrend channels, downtrend channels, subcorrection channels. That's what we're looking at here. So what is different about today, or yesterday, I should say, versus the November 25th area versus the October 4th area? Back then, we were at the lows of that uptrend channel. We are not there today. I think what we're at, and we're going to, we pay attention. What I would do is if we were all the way down at the bottom of this uptrend, I would be long and strong. Instead, I think there's a correction that is absolutely underway. We'll let the market tell us, but you're just simply inside this sub-channel here, this correction sub-channel. I believe that, we'll see another reading down in those 80s at some point in time, but you're going to have a bounce today. You can see that bounce coming when you took a look at those readings as we were going back and we were taking a look at what was going on here inside this participation index. So it's a great tool. You guys should be aware of it and possibly take a look at it. And it's a great tool because it helps you to understand what is going on inside these markets. And I do believe that we are going to, in the S&P 500, that we're going to come back down and test this area. And if we don't, if this was for some reason, a significant low, then it's going to be one heck of a to B equals CD on the way up. But look at how price has been contained with inside this uptrend channel, going really all the way back into the middle of September 2011 time frame. Certainly the bottom, October 4th, 2011, is what set that up. So that is on your S&P 500. And if we just simply go take a tour around the world, let's go see what we've got out there. Here is the DAX. And on the DAX, folks, what the DAX did yesterday was it came down into the March 7th, in their case, lows. The low on the DAX was 6612, and where it got down to and where it closed was 6606. So it closed below that area. Let's go take a look, blow this up, see if there's any kind of candle formation. There's not a bullish engulfing candle because you can see where it opened. It opened up above yesterday's close, and certainly this is an important candle formation, but not one that I would use as a confirmation that the work to the downside is over. We're going to be paying attention to volume. We're going to be paying extremely close attention to volume because why, folks? We're not indifferent when it comes to understanding price and volume around here. Not at TFNN. 877-927-6648. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade. You've heard Tom O'Brien on the air and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. You got the Dow up 107 points, trading out at 12,821. S&P's up 12.5, up 1371. The composite up 25 points, out at 3016. The small caps up 8 points. Small caps leading the charge on the way up a full percentage point. They're trading out at 792.29. Again, our call number 877-927-6648. Would love to hear from you. You got Apple on its way back up to some planetary constellation in the sky. You got Apple trading up $6.56. We'll go take a look at that. Microsoft down 5 ticks. Intel up 31 cents, out at $27.76. Google, which will be coming out with earnings, I believe, on Thursday, they're up $7.75. That's up a point. Google actually leading the charge on the way up dollar-wise. Priceline right behind it. Then Apple right behind that. Oh, you've got some juice in the NDX for sure. Take a look. Those three leading the charge dollar-wise on the way up, and all of them up a full percentage point. Big pop, you've got TravelZoo, TZOO. They are up 27% this morning. What the heck happened there? I don't see any market news on that. We'll go take a look at TravelZoo. You've got that mattress firm, MFRM. Kate Stalter brought that to our attention yesterday when she joined, I think during her show, and then when she joined Tom and I was privileged to spend a couple hours with Tom from 4 to 6 yesterday. Mattress firm, they're up $4.83, up 13%. You've got Titan Machinery, TITN. They are showing some tightness this morning. They're up 15%. That's trading up $4. You've got Amazon up $3 as well. Walter Energy, WLT, they're up $2.70. In fact, everything on my screen here, which is about 20 stocks. If I go down to the bottom one, you're looking at Union Pacific. They're even up almost $2, $1.89. That is what is popping. That is what is moving. Let's go see what's grooving. And grooving to the downside, leading the charge on the downside, you've got F5 Networks, FFIV. They're down $6. That's down 5%. You've got VMware, VMW. They're off $4. That's down 4%. Let's see, Computer Sciences, CSC, down $1.86. Let's see, Packard Inc., they're off $1.21. Just trying to get rid, not go through the pro shares and the direction shares that might be out there. JDS Software, haven't looked at that chart for a while. JDAS, they're off 67 cents this morning. And NetTap, NTAP, they are down 62 cents. So on the way down, not that much, just F5 really leading the charge on the way down and on the way up. Priceline, Apple, and Google. Let's go take a look at volume as it's coming in here. I've got the SPY up. We got the IWM, the small caps here on the 5-minute chart. Let's go take a look at that here real quickly, see what that might be doing. Let's get rid of everything out here on the chart. You can see you do gap up this morning with 1.4 million shares. You're following that up here in this next 5-minute session. You've already got 1.6 million shares coming into it. Where might the small caps be headed? Well, if we go back and just simply take a look at a couple of volume spikes out here, just simply on the intraday right now, it is tackling this spike right here, which is from 11:15 yesterday morning. You did on the way down 2.2 million shares. That's where it's really attacking. Looks like the next area here. If we just take a look at just here on this leg down here, let's just take a look at some Fibonacci retracements. This is coming off of, I would say, where you really saw a change in trend. That was at 3 o'clock on the 9th in the afternoon. We go from that high out there on the IWM, $80.57, all the way down to low, put in yesterday at 210. The low there, 78.14. You can see right now you've gapped up into that 0.382. Says to me it wants to at least get to 79.64. Sweet 618. Let's go take a look at what's going on in the diamonds or the SPYs. Let's take a look at the diamonds next. On the diamonds, you gap up with volume this morning of 187,000 shares. Again, what we are taking a look at here is the 5-minute chart. Of course, it's not exactly holding price, not really a whole lot of volume when you take a look at that. 187,000 shares, where yesterday at the close, you did 389 million. But let's take a look at where we saw a significant, let's take a look at the same Fibonacci retracement areas. That is coming, I would say, right here off of this high. That looks like it was put in at about 255 on April the 9th, all the way down to the low that was put in on the diamonds. That was done at 240. 240 yesterday. The low out there, 126.92. So you can see you do gap up into that 0.382 area there. And so that says to me, sweet 618, 128.57 is its next target. You're trading out at 128.03 right now. Let's go take a look at the old Qs out there, because the Qs leading the charge for sure. Why is this chart here not updating? Give me a moment here to move, to kind of cleanse my palette. Let me get rid of some of these lines that we've got out here, and let me refresh this screen, see what we've got going out here, because I know it's not trading out at 60. There we go, 66.53. So the Qs pop and the Qs are dropping. Oh, that is interesting. That's interesting, folks, because that's the leader in the clubhouse. And what I mean by that, folks, that is the strength inside the marketplace. So now the Qs, they do jump up, they do gap up again. I'm going to the swing point high out here. Price that was put in again on the 5-minute chart at 3 o'clock on the 9th, all the way down to the low that was put in yesterday at 2:40 p.m. That low was 65.92. So if you just take a look at in these sacred geometry, folks, you want to respect it, you want to understand it, you want to be able to have it on your charts, because it will help to guide you as to what's going on. You're up above that 0.382 level. That says what the Qs want to do is get up to the 66.88. That is the sweet 618. Let's go take a look at some of these stocks that are popping and dropping. So let's go take a look at TravelZoo, T-Zoo, because that is up 27%. So let's go see what is going on in the travel world there. Let's put that chart here up on the screen, TZOO. And we take a look at TravelZoo, trading out at 26.19 right now. And we take a look at TravelZoo. Wow. Is that a misleading chart to be up 27%? You take a look at this stock here. Of course, it puts in what? It puts in a bearish engulfing as it was making its high back in April 2011. Made a high out there of $103.80. Is that possible? Of course it's possible. $104, folks. Now this is why I'm talking about the 5 enemies, indifference, indecision, doubt, worry, overcaution. What I want you to understand, remember I said, really just want you to understand, hammer candles. I want you to understand bullish and bearish engulfing candles. They will absolutely, these are leading indicators. Absolute leading indicators out there, understanding these candle patterns. Take a look at the bearish engulfing candle that TravelZoo had here on April 26th. Absolutely was signaling to you lower prices were coming. And sure enough, it did, because you went from this here made a high out here with 2.2 million shares. The following day, as it was making that bearish engulfing, came off with nearly 4 million shares. Volume off the top, with a bearish engulfing, was signaling to you, if you were in TravelZoo, you should take a look at getting out of the equity. Well, just think, if you'd gotten out of the equity that day at the close of $86 versus right now today trading out at $26, that's after gapping up with a 27-ish%. It's now up 24%. And all that is, you got another gap down here. Oh, this is a horrible, absolutely horrible looking stock chart out here. Look at the downtrend on this little puppy here. Now, it did have, That's why you want to understand bullish, not that, look, you want to understand bullish and bearish engulfing candles. As this was making a bottom back here on October 4th, 2011, just as so many stocks were, just as that participation index was getting to an extreme, folks, you can see you had a nice bullish engulfing candle. You engulf 1, 2, 3, 4, looks like 4 trading sessions, 3 or 4 trading sessions out there, and that led to higher price. That is on Travel Zoo. But let's move away from the zoo. Let's go take a look at F5 networks, because that's grooving to the downside. So let's go see what F5 has in store for us. FFIV, they are trading down 5% right now. You can see how that has gapped down. F5, in this case here, now this is kind of interesting when you take a look at the stock, because this stock does have a confirmed A to B equals CD pattern. Now that A to B, what I mean by that, folks, is if you come back here on F5 networks and what's the word I'm looking for? Whatever it is, I'm going to forget that word. But when we take a look at F5 networks, we go back to October 4th. No surprise. That was the word I was looking for. Just couldn't get it out of there. And so no surprise that if you take a look at October 4th, what you did is you've got another bullish engulfing candle that's out there. You engulf 2 or 3 trading sessions. That was your A point, was actually on October 3rd when you had F5 networks make a low of 69.60. What does it do? It moves all the way up into a B point. That was on December the 5th. It gets up to a high of 117.30. It's a heck of a run, 117.30 from the $68 mark. What was it, $70 mark, 69.60. So that's a heck of a run. What does it do? It pulls back, and of course, did it give you an indication that it maybe was going to pull back here? Well, it looks to me like a bearish engulfing. What do you say, Al? Yeah, he says, yeah, that's a bearish engulfing candle out there. Pulls back into the price point on December 21st to a low of 99.59. And so we have our established B point. Again, that was December 5th, 2.2 million shares. You can take a look on the bottom here. That shows you what the volume was. And when you come up through that area, folks, you gap up into F5, into that B point. You gap up, so you got wide price spread, even though you've got a gap in price here. Just use your imagination as you're drawing your palette. So you gap up, and you do it wide price spread with accelerated volume. You got to love it. It does 7 million shares. That 7 million shares was going against the 2.2 million shares at the B point. Now, what does that give it? It gives you first just a 1-to-1 A to B equals CD. That would complete at 147.41. So until this B point is broken, you still are inside a confirmed AB equals CD. I don't know what the problem here is on F5 as I take a look. I don't know if it's an earnings issue. Nothing is popping up on my news service for F5. You are gapping down this morning. It's going to be important for it to hold that B point, that December 5th area. Again, that has 2.2 million shares. You do gap down this morning. You've already done 813,000 shares. So, it is putting in jeopardy that A, B, C, D pattern unless the buyers come in and buy this. But 147.41 still in place on F5 networks. Let's go and take a look at what else we've got that's, I don't want to look at Priceline. Don't want to look at Google. We can look at Google. Don't want to look at Mattress Firm. We took a look at that yesterday. Let's go see what's grooving to the downside. VMware. Let's put that chart up on the screen. Let's see if we can learn anything from VMware. VMW is a ticker symbol on that. And we take a look at that. Has gapped down. You've done some decent damage already in the first 16 minutes of trading. Traded 1.1 million shares so far in the first 15 minutes of trading. What is that doing? The next area of volume that this is VMware, is at the breakout area from January 24th, where it did 7.5 million shares. This thing has been going up on what, folks? Look at the volume as it has made its way up. That is what I call indifference. If you were in this and you were not simply paying attention to volume, you would certainly have wanted to move your stop if you were in this stock somewhere underneath, somewhere in this March 13th candle is where you would be paying attention to it, because you've got it's where you've got really your biggest sign of strength from a volume standpoint, 2.4 million shares out there. You're trading inside that area right now. The high of that candle, 105.30. The low of 100.35. And as I said, you're coming into it right now with 1.1 million shares. So you're going to blow away the volume of that little mini breakout area. If you are in this stock and you get a close below 100.35, folks, what I can say is get the heck out of Dodge and or wherever it is that you're at. Get the heck out of the stock. And if we take a look at this, let's just pull this back on a longer-term basis, see what else we might have here in VMware. This thing trying to make a complete move of a move, and really it did. That's pretty interesting. So you go back and take a look at VMware and go back to the all-time highs in this, going back to November 2007, where it makes that shooting star candle. That shooting star there, the high 125.25, but the low 113.59. On the weekly chart, you do 19 million shares. And 19 million shares was coming against, as you were coming into it last week, you were coming into it with 5.4 million shares. How about that? That's a hoot, isn't it? So let me just draw the line here at the bottom of that, because you certainly did test that on some lighter volume here. Let's see. Yep, you absolutely did. Now I'm going to see if you rejected the price as well. Remember, the low on that candle from November on a weekly basis, November 2007, 113.59. Where do you close out last week? 113.75. You closed inside it, but you certainly are now rejecting that area after making a 100% move of a move. Let's go see what else is out there in the marketplace. How about let's go take a look at some of the spiders, some of the sectors inside the S&P 500. First one we're taking a look at here is the financials. You got the financials trading up at 1517 right now. Let's just put that down on a 5-minute chart, see what we've got. Any kind of volume behind this move up here? Absolutely none, folks. Absolutely none. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. And these are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. Dow's up 82 points right now. S&P's up full 11.5 points. Composite up 25. Small caps still leading the charge on the way up. Only up 0.92%. They're up 7 points. And talk about getting no respect. Apple is getting no respect. I see here that that a antitrust suit has been filed against Apple, and I'm going to guess this is Hachette, on their e-book pricing. They get no respect whatsoever. Anything to jeopardize getting Apple into that $1,000 mark. Of course, it's at $633.31 right now. Doesn't seem to be having much of an impact here on the stock. And so maybe when Tom gets in, we can see a little bit more detail on the filing there. That is on Apple. So as we are just simply taking a look around the markets, let's go take a look at the dollar index out here. Let's go take a look at King Dollar. King Dollar, it's an important day for King Dollar. Why do I say that? Well, because right now you got King Dollar trading out at 79.86. We got a long way to go in the trading session, but a close below 79.96. You're 10 ticks away from that. Close below that. That sets up a bearish engulfing here as it was making a 0.61 retracement off of the highs from March the 15th and the low of April the 3rd, where it made a bullish engulfing down there. So if it does if it does close out today at either 79.96 or below that, would set up a bearish engulfing. What that would tell me is you're going to be in a little bit of a sideways trading range here inside King Dollar. Of course, what is going on? King Dollar is a basket of currencies led by the Queen herself, Queen Euro. Let's go take a look and see what the Euro is doing out here. Real quickly, the Euro is trading out at, this is the Euro-US dollar currency pair. And where's my daily chart on that? Let's just make this the daily chart. And let's see what we've got going on here with the Euro. Euro trading out at 131.325 as we speak. And the Euro is really, it's on its way down to the 1.29 area. That would be the full completion of this Gartley cell, which sets up a new A to B equals C to D. 1-to-1 move on that would be at the 1.29 area. And so we'll just have to pay attention to now. We take a look at the Euro. The Euro closed out its session yesterday at 1.30803. Where did it open? 1.30802. So this could be setting up a bullish engulfing here. That would make sense. You've got the Queen. Who's ruling who? Is it the Queen ruling the King? Of course it is. We all know that that's the case. So that's why you want to pay attention to Queen Euro. Let's go take a look and see what's going on inside the Japanese yen out here. Got the Japanese yen U.S. dollar currency pair trading out at 81.03. That is after making a 1 to 1.272 A to B equals CD down. It completed that at $80.56. It did that in the early morning hours this morning. Got down to a low of $80.56, 0.559 to be exact. And so that's a pretty cool thing when these things work out the way they do. I do believe that the yen has a little further to slide here. I think that the yen is going to go ahead and make a 1 to 2 A to B equals C to D. You're trading below this 0.382 area here right now, and I say sweet 618 is the next place for the Japanese yen, unless there is some other type of bullish candle that comes in here. And so I expect that we will see the Japanese yen get in that 79.13 area. That's where you would want to fire away at going long the Japanese yen. That's short of any other candle signal that's out there. And we don't have that today, so you don't want to jump in front of that freight train because the reward to risk is just simply not there. That's my music. That means it's time to go. Time flies too much, folks. Thanks for joining me. Stay tuned. Tom and I will be up next. Then we go to our man, Basil Chapman. He's going to be doing a tsunami wave today. Send out the white light to all the folks over there and that are dealing with the major earthquakes out there. Have a great morning, folks.